Okay. That's good if you're able to see my screen. So today I want us to go through technical analysis, like the introduction part of it, because I came to realize that we always have new people, and new people mostly, especially when they are teaching about technical analysis, most of you lagged behind because you don't know the foundation or the basics. So today, this is what I wanted us to go through. You can see my screen? Hello?
Yes.
Okay. So we are going to go through about market analysis. Yeah, I want us to go through how you can understand a trend. As you know, we have a downtrend, uptrend, and a ranging market. Then we have change of characters and the break of structures. But before that, I want us to first understand, like, there is this thing, I don't know. Some people don't know these candlesticks. I want us to first understand how a candlestick is formed first. Then after that, we go to trends. Yes, so as you know, we have a bullish candlestick. We have what we call a bullish candlestick. Let me have my mouse. So that I can be fast. Okay.
A moment, please.
Yes.
Anthony, can you please kindly switch off your microphone? It's disorganizing the audience.
Okay,
Thank
Anthony,
you.
you can.
You can proceed.
Okay. So this is a candlestick. Assume this one to be a bullish one. Sorry. Yes. Let this one go. Assume this one to be a bullish. A bullish candlestick. Yes, as we know, we shall first start by naming that candlestick. You get? Then we go to know how that candlestick is formed. Yes, for a bullish candlestick, of course, we know it has what we call wicks. It has what we call wicks. Wicks. It has what we call wicks. Even this one is a wick here. Down here, it is a wick. It is a wick. Sorry. Yes. Then we have what we call high. For a bullish candlestick, we have what we call, I can say this one. This is the high. It is the high. It is the high. Sorry. It is the high. And this is the close. Yes, this is the close. Sorry. You keep noting. It's better when you guys have a book, you'll be writing somewhere, because these things we just teach them once and we don't repeat. And that is a close. I know many of you don't know this. Yes. Okay. Sorry. This was what? That was a high. I didn't high. I wish I had drawn this one earlier. Then this one is the open. Yes, this is the open. This is the open. Then this is the low. Low. Yes, the low. Here we have the lower part of the and low. Yeah, sorry. Low. Yes, like that. Okay, let me explain. Yeah, by the way, this is the body. This is the it is the body. It is the body. Yes. Okay, for the candlestick, if we are to look at a bullish candlestick, are you guys seeing my pointing stuff that shows where I want? You can see.
Yeah, we see.
Okay. Then you can see here the body. Of course, the candlestick has a body. It has also wicks. But if now we start categorizing different types of candlesticks, we have a bullish candlestick and a bearish candlestick. So for a bullish candlestick, it opens from down, you get, and closes from up. So the upper part of the candlestick is called, you can call it the upper shadow, or the lower one, you can call it the lower shadow. So this one is the lower part of the wick, and this is the higher part of the wick or the candlestick. These ones where you see just something very weak like this, like a line, that is a wick. And I will explain how it comes about. Then this one, the upper part also, it is a wick, the upper wick and the lower wick. So for a bullish candlesticks, you know, for it is for buyers. Buyers, they find the market here. It will open from here. But when it opens from here, it is kind of pushed down by sellers. You get? It has opened from there. The sellers push it from down. When the sellers are pushing it from down, it means from here up to here, it will be having a body. Sorry, it will be having a body. But now buyers, because buyers are very strong, they will push this market from here, reach this point. It means when it reached that point, the body would be disappearing, forming a wick. But now buyers are still strong, will push this market up to this point. But when they reach at that point now, also sellers say no, we also need to bring some energy. They will push this market from this point up to here. And the stuff, the candle will end from there. You get? So it means if you're in a 4-time hour frame and we are forming a candlestick like this, are you see? It means our candlestick will be looking like this. Let me hope you have understood that one, how a candle opens and how the candle closes for a bullish candlestick. Then we can go now. I urge you guys always be with a notebook and be noting down. So we are done with the bullish candlestick. Then we can start with a bearish candlestick. For the stuff remains the same, but we just change here. That one, it will be the open. It will be the open. And this one will be the close. Yes. Close, sorry. It will be the close. Yes. So for, of course, to always be having the body. And by the way, after just understanding this, so we form different shapes of candlesticks. I remember last time I took you through candlesticks and I shared the book where they teach those Japanese candlesticks or the candlestick anatomy. Yes. Of course, you will find us ourselves having different types of candles. sorry, yes, you'll find yourself having a candle like this. I'm just yes, I'm just illustrating. Find yourself having a candlestick like this with a long wick. So just know each candlestick will be having its own what? Its own name. But just the parts remains the same. Whether it is a bullish candlestick or a bearish candlestick. So for a bullish candlestick, for a bearish candlestick, it opens from here because they are sellers. They are pushing the market down. It will open from here. But after opening from here, some buyers bring some energy, push the market up to here. I think where this is high, the maximum part of the maximum distance that the market has moved, or the buyers has pushed the market. But this, because sellers are very strong, they will push back, removing that body, forming a wick, continue push the market. Now these ones, now they need to change their directions. These arrows, these arrows need to change their what? They need to change their directions. Yes. So we shall be looking at, say the market starts from here, it is pushed up by what? By buyers. But because sellers are very strong than buyers, what they will do, they will push this market down. You get? They will first push it here, removing that body, continue from this body up to here. But now, because also buyers are bringing some energy, they will push this back from here up to here. Yes, making the candle closing from here. That's why you find the candle is closing from here. That is a bearish candlestick. It opens from up and closes from down. The low, then this body is the wick. Let's go to a chart. Let's go to the chart and I want to explain it from the chart. Okay, we shall look at both. Yes, we shall look at both the what? The bearish candlestick and the bullish candlestick. Yes. I want a candlestick with, I want a candlestick with both wicks. Yes. I'm seeing a very good example here. Yes. Are you guys able to see these two candlesticks, this one and this? This one and that?
Yes.
I don't want to find myself alone in the class. Okay, so as we can see, this is a bullish candlestick. Green is a bullish candlestick. So we are going to see where did it open from and where did it close from. And how do you know that the next candle started from here? So we are going to look at that. So this candle started from here. You can see this color line, the black line. So that
we can see.
Okay. That candle opened from there, from here. But sellers pushed it a little bit down up to this point. But now, because buyers were strong, they pushed the market, removing that body for sellers, the red part, bringing the wick. Now this is what we call the wick. This one, the long one, is a wick, creating this body up to here. But also, sellers were somehow strong. They pushed the market back here, making this one the close of the candlestick. Opened from here, closing from here. So when you see where the next level of the candle begins from, is where that candle closed from. If you can see this candlestick, this red one, you can see that it started from here. Because we are saying for the green one, the close is here. Then for the red one, its open is here. Where this one closes, like if in a 4 time frame here, it means this candle took 4 hours to be formed. So after the 4 hours elapsed from here, and this one opened. When this one opened from here, but it was pushed a little bit higher by buyers, but sellers were strong. They pushed it up to here, but buyers also again pushed this one for the candle to close from here, for the candle to close from there. Those are the two candlesticks that we have, a bullish and bearish. The way you see this candlestick, each is having a name. You can see this one. This one is, you can call it a shooting star. Or this, you get? You can look at this candlestick. What does it show? You get? This is a tweezer candle. If you can go into candlesticks, you will understand those things. Yes, we have them. Yes, I think that one is done. I just wanted to first illustrate how those candlesticks are formed for my beginners that we have here. But I also know that we have people who have been in the business, but they don't understand those things. So, but it's not a problem. We are here to teach you and guide you and learn. So let's go to trends. Let's go to the market structure. Yes. Okay, as you can see, in the market analysis, we have trends. For a trend, we have an uptrend, we have a downtrend, we have a ranging market, and we have what we call change of characters and break of structures within the trends. So for the downtrend, we have what we call lower low and lower high. For the uptrend, we have what we call higher high and higher low. For a ranging market, we have what we call equal highs and equal lows. Guys, please make sure you have a book if you don't understand these things and note them, because they are very important and they can help you learn. So we are going to start with an uptrend. Okay, we have said in an uptrend we have what we call equal lows. Sorry, in an uptrend we have higher high and higher lows. Yes, this is an uptrend. If you can see, you can easily see this is an uptrend from this point up to this point. So it is becoming what? Yes, let me just how do you can just get this trend line? You draw your line, let it touch at least 2 points. You see, we are going up. Okay, I can call this one. Yes, make your trend line at least touch 3 points. You get 3 and above. You get it has touched here, and again you can see. But we have said that one can't prove to us that it is an uptrend until we see that we are making what we call lower low and the higher. Sorry, until we see that we are forming what we call high highs and higher low, high high and higher low. How is it formed? Of course, when the market, let's say that, of course, for the certain new trend, we must be in a certain trend and go into a different trend. Let's say that we were in this downtrend, kinda, and we want to start an uptrend. Of course, when we reach here, I will come and explain this part of breaking and whatever. So we shall form what we call a higher high. But we know that the market can't move straight. No, it has to form what we call a pullback or a retracement. It has to have some kind of retracing. So in that form of pulling back, it forms what we call a higher low. This one becomes valid to be, it becomes valid when it doesn't break the previous level. That's when we confirm this one that it is a higher low. So when the market is pushing again up and it breaks this level and it remains above this level here, and it remains above that level, and it pulls back and it doesn't close this one, we confirm that this one has been what? A new higher high. When it pulls back and this one doesn't break this one, it means we have formed a higher low. It means this level is stronger than this one. You get? So here forming a higher low. So the market continues like that. It forms a higher high again. It comes back, it forms a higher low. But as it is going back, I want you to see this. As it is going back, now we are going to what we call, like the market is going to turn. You get? The market is going to turn to a downtrend now. As it is going back, it fails to break this level. So it will form what we call high. It can't be a higher high because it is not higher than this. It has formed a higher low, but it has failed to break this previous higher high. It will form what we call a high. So as it comes and breaks this level, the higher low, and it breaks this previous higher. Of course, when it breaks this previous higher low, will form what we call a lower low. That one is the confirmation that we are going to a downtrend. You get? Let me explain it from this side. Here at this one, for a downtrend, we have a lower high. When a lower high is in a downtrend, we form a lower high. Then there's a pullback. That pullback will form for us a lower high. But the market still continues and breaks the previous lower low, forming a new lower low, forming what we call a lower high. This process continues up to this point. Let me hope that one is clean. We can see if you draw your line, you can see it is coming down. Yes, it is coming down. It is coming down. Meaning that one is a downtrend. You can see it is a downtrend. The other one was going up like this. It was going up like this. But this one is moving down, implying that this is a downtrend, this is an uptrend. In case time allows us, we shall go to chart and see them. But in case time doesn't, we shall resume from there next time. But now, yes, that is it. But now, how do we get break of structure? I know many of you hear about break of structure, change of character. That one happens like this. Are you seeing this previous higher high for an uptrend? If you're in this, I can draw my line here. That is my higher high. And I form a higher low. When this market pushes from down here, from this previous higher low, and it breaks this level, there are some markets that can come, it fails to break this. It just first consolidate from here. But when this market breaks this level here, and it forms this one, okay, immediately when it closes this and remains above, here we have what we call break of structure. It means it has broken that structure. Yes, we have what we call break of structure. Here should be called the abbreviation part of that is just BOS. Yes, break. What we call that one is not mute. You can mute your mic. Yes, that's how we call break. That's how we break the structure in what? In an uptrend. We break the previous higher. Break this previous higher highs form. This one is also break of structure. At this point, there is break of structure. Yes, there's a break of structure. That is in an uptrend.
Switch off your microphone and your camera.